Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Monday, June 21st, 2010. This morning we're talking about Yuan Gan, and what I'm talking about is the Chinese peg that the government's been using to keep the yuan steady versus the US dollar. And over the weekend they announced that they're going to begin to remove that peg and to allow the yuan to trade freely. Now this is a good thing. This is welcome news to the market, as it's widely been held that this yuan peg that the Chinese have been holding has created in part this huge global imbalance that's taken place and has allowed China to accrue all this capital, because basically by having a low currency, all right, the Chinese, who are an export-based economy, are allowed to sell their stuff cheaply to everybody else, and then they don't buy anything from anybody else because their currency is lower in value, so things are more expensive. Not to mention that they don't have a huge domestic demand over there. So that's been in part one of the reasons why this huge global imbalance has been created, and hopefully that this is going to turn this around. Now, the problem is that any appreciation that we're going to see or any movement is going to be gradual. So right now I'm hearing analysts talking about this move taking place anywhere 3 to 5% here for the next year or so. Now, if we just look at the market, you can see that the Aussie versus the yen trades 1.18% a day. So just to show you how incremental this may be, but this is a good sign. But we also have to remember that there's a G20 meeting coming up this weekend, and outside of the euro debt crisis, this was the number 2 topic of conversation to take place. And by making this pre-announcement, the Chinese are basically buying themselves a little time, and they're shifting the focus back towards Europe and not on this. But until we actually see something happen, we'll have to see how this plays out. But China's always been the X factor in the global marketplace because of this currency peg, and they're buying stuff, and they compete with other countries for goods and services, yet they were always able to maintain this low dollar. So what's happened is that we've seen some dollar strength as of late because of the euro debt crisis. So that was a de facto rise in the price of the Chinese yuan. So that could be another reason why they're doing it. Perhaps they're worried that a lower euro is going to push dollar higher, which is going to make them more competitive. So there's a lot of things going on there, and we just have to sort of be careful of what's happening. But basically what this has done is this has encouraged risk-taking worldwide. You can see here real quick, here's Aussie USD. We're just going to look at the 4-hour charts this morning. Nice little uptrend on this. We've been in risk-taking mode for a little while here. Just want to look at the euro versus USD. It's actually showing it's down a little bit, but it got almost as high as it tested 124.75, so just under 125 there for the euro, and that was in the overnight. It's given back some of its gains. Global stocks are up across the board. Big move in Japan. Let's look here at euro USD. Japanese yen is the weakest currency today. The yen's got a pretty high inverse correlation to its market, so when the Nikkei is up, the yen's typically down. And you can see right here, wow, that's a nice little candle. That we've had some recent dollar strength versus yen, and this is all on risk-taking. People are putting on carry trades. They're selling yen to buy things like the Aussie, the Kiwi, and the Loonie. Now let's look at the Loonie here. Loonie's been on a nice little move down. We're just above 101.5 here. So that's looks like it's moving back towards parity. We've got oil getting a bid. It's up in the 68.25 range. Saw a 1260 handle on gold earlier. So this is really helping out the commodity currencies as they move forward, and as this news comes out that hopefully a stronger yuan is going to be good for Chinese demand, which is going to have them buying up a lot more stuff, including commodities worldwide. So that's what we're seeing so far this morning. This is the big news. Excuse me. Tomorrow we're going to get some news out of Great Britain. We're going to see their emergency budget come out. Just to show you, the pound's been trading around a little bit. It got almost as high as 149.5 earlier, which is just under 150. They're going to come out with their emergency budget. What you call it, report tomorrow, excuse me, and that's going to show what's happening over there. Now, there's going to be some increased volatility going into that because there's always uncertainty and fear of what are they going to do, what aren't they going to do. So we're going to have to see how that plays out. But overall, this news out of China has been positive for the markets. Hopefully, it's going to help restore some of the balances that have been created by the yuan peg to begin with. So, that all sounds good, but what I've come to learn with over the course of the years trading and when you deal with the Chinese government is that things may not always be as they seem. Now, that's not to stereotype or anything like that. It's just China has their own agenda like everybody else does, and they've gotten to a point where they're so large that they can basically tell anybody, hey, this is what we're going to do, and if you don't like it, tough. The U.S. had that status for many years, and nobody complained then. So, I think it's a little bit unfair to complain about China in that regard, especially if they're willing to, make some of these moves. But, at the end of the day, they have to be a more willing participant and willing to, allow other people to, participate in these economies and to keep these things balanced, because if they want to keep growing, then they need others to be able to buy their stuff. And if nobody wants to buy their stuff because they're not willing to play ball, so to speak, then that could be a problem for them going forward. So this all takes place ahead of this G20 announcement. There's some news this week. We've got U.S. GDP at the end of the week, FOMC meeting on Tuesday, Wednesday, and then we've got the UK budget report tomorrow. So keep an eye out on those. Looks like we're in for some risk taking today, and we'll see how the rest of the week goes. That's it for today. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.